Morning all. Thanks for joining on this call. Okay, Piers, I'm going to pass the floor to Piers Montgomery from Cape Noir, who's our liaison between Marrick's JV with the Savant Earth-Eye project. Given all this uncertainty about China reopening and all the chatter about that, Guy, having seen that and with Piers, we thought it'd be interesting to hear Piers' take on the satellite technology to see if we're seeing any signs of Chinese industrial activity. I think also at the end he might have some interesting information with regards to some of their nickel analysis as they add other ventures on Indonesia to their reporting. Over to you, Piers. Many thanks for doing the call and look forward to hearing what you've got to say.
Yeah, thanks, Alistair. Look, super interesting time to be looking at this data. We were, even a couple of weeks ago, looking at it thinking that we were expecting a bounce after the Chinese Communist Party Congress, and looking for a reopening that would naturally sort of seem likely to follow that. And actually that was very disappointing, as we'll see in a minute. But of course, what's really sort of spurred us to look really closely at the data is that big jump that we saw, broad-based jump in commodities on Friday, very much obviously an onshore bid, and that polarization of the onshore bid, including sort of retail confidence, when, as I say, it's very difficult for anyone outside Western fund managers to own Chinese equities or Chinese assets at the moment. There's no way you can get in and do any sort of due diligence. And then, of course, you've got a lot of risk associated with the geopolitical environment. So, look, copper naturally sort of gravitates to probably one of the few asset classes that you could probably actually get involved in if you were of the belief that there is going to be a reopening in China and that industrial activity is picking up. So without further ado, we'll get straight into it. Actually, just one thing first, to say, look, we do publish a lot of our observations as well. We're going to hold this call, and depending on its success, we might well hold more in the future. But please do look out for our dailies, or not daily, but our commentaries that appear in the morning thoughts. A couple here, we put out a signal, for example, in early August, saying that we saw that nickel activity was down a long way, which we thought was symptomatic of a weak stainless steel sector. And sure enough, we got a price response later that day. Similarly, on the right hand side, we were observing that the energy crisis was, and really the heat wave in China was starting to affect copper production in a number of provinces, and that was going down quite significantly, which later that day, again on the August 19th, saw a very big draw on bonded stocks. Please do keep your eye out for those in the publications. But look, just to start with, I would say that I actually been starting to believe that these real-time indicators are actually becoming more and more important. The reason being that, and why probably actually as well, that we're seeing very low stock numbers and these markets are sort of tight on a micro level, is because during the pandemic, and certainly in China, because of logistics disruptions, it became very difficult for people to actually sort of sell through third parties. So we saw a big drop, I think, in trading, in activity at traders, and a lot more direct business between smelters, semi-fabricators, and so on. And so what we've seen is actually the stock taken out of the system in visible locations, much more direct trade. And so therefore you've got that pass-through effect going up and downstream down the supply chain that in real time is, as I say, I think is much more important maybe than it was pre-pandemic. And actually exacerbated, of course, by everything that's happened with MyCape in the last few months. But anyway, okay. So what we're looking at here on this slide is on the right hand side is copper smelting activity that we've seen at a China at a national level over the last 3 months. And that's the chart with the red, so the red circle. Well, this is what we were expecting. We were hoping to see a big recovery in smelting activity post the Communist Party Congress. But as you can see from the red circle, we really didn't, if anything, we got a deterioration. And that was because I was speaking to Ian Roper from Astris, who you'd all be familiar with earlier today, just to get an update. And he was sort of saying, well, actually what happened was that because the provincial governors were so terrified of being out of line with the senior members of the Congress, where it was notable, obviously, that we didn't get any announcement on any sort of COVID relaxations, but the lockdowns have been super strict in the last month. And so there has been a little bit of a decline when we start to look at activity. Now, that has turned around since the beginning of the month. And I've included the chart on the left-hand side by way of comparison to show the type of recovery that we usually see after Chinese New Year. So it's you can see from the gradient of the curve, it's not quite as steep as that, but certainly it's a big uptick from where we were at the beginning of the month. And as I say, we're looking for anything that we can get from an industrial base to corroborate this better market sentiment onshore that we're picking up, obviously, from the markets, in the financial markets and the bond markets. The only other one that, obviously the trade figures are pretty poor, or very poor actually, when you look at the export numbers. PMIs again back to sort of June 2020 levels. And then the only one that really stands out that's in support of this would be the Li Keqiang index, which as a preferred measure of economic growth, that has shown a bit of an uptick as well. So I think what we would say from here is that, as well, something that Ian wanted to reinforce is his view that certainly he doesn't expect the lockdowns to be loosened anytime soon, despite some of the mutterings towards the end of last week. He was saying that in fact, quite the opposite is what is happening is that the central authorities are learning to be able to keep that sort of polarization of quite harsh residential lockdowns, while also keeping the logistics routes open and keeping the economy running. And they're getting better at that. So we're not going to go back to April, May, and we're going to be able to try and run, as I say, these sort of yin and yang opposite policies in tandem, which is why we could possibly, as I say, start seeing this uptick in industrial activity that has been evident in the last week or so. So rolling forward, to say as well, look, we think that this is significant because it's actually also happening in the areas which we would consider to be the engine room of China growth, well, and certainly for the copper industry, the East China region and Southwest China. So to start with, East China is where the semi-fabricated manufacturing hubs are all located, or predominantly located, Shaanxi being a major province there. And obviously, 40% of the smelting capacity, country level smelting capacity, also located there. And then in the Southwest China, home to the largest property market in terms of floor space under construction in Guangdong, but also home to significant growth throughout those other southern provinces as well. So I think that we're looking together, East China and Southwest China account for roughly about 45% of floor space under construction. Now, on the right-hand side, you can see I've just pulled out 3 of the largest smelters in these regions. So you've got Jiangxi's 900 KT Guixi on the top. Then you've got Jinchuan's Fangchenggang in Guangxi, their plant there, and then the Tongling Jingguang plant. So that's 400 KT and Jinchuan's 450. So the largest of the smelters. And you can just begin to see, as I say, those upticks in smelting activity is the line above the yellow bars, which indicate that they're active. But then that raw index score, which is the line above it, as you can see, just starting to show that increase in activity at the beginning of November relative to the previous history. So we're pretty positive about this. We think that this is, say, delayed. We were expecting to see it after the end of the Communist Party Congress, but certainly there are good reasons as well why we would see copper activity pick up at this moment in time. The state grid orders in the electricity sector and the wiring sector, sorry, have been delayed from earlier in the year as a result of the significant price volatility that we saw. So those have really been sort of back-ended, really squeezed into the back couple of months of the year. So those are flowing through now. And also its peak copper tube, perversely, copper tube demand, not for reverse cycle air conditioning, but actually in preparation of new models being in the shops for Chinese New Year, and getting those, as I say, getting those across the production lines now in advance of those, in advance of February. So pretty, as I say, and Ian was confident as well that we would now start to see the upticks in industrial activity that that he was expecting in Q4, and which we started to see actually in September with new lending and policy banks sort of stepping into pseudo bailout developers. And while we've had a pause for a month or so, that looks set to resume now. And then finally, just to say, it's good to have the confirmation that we're also seeing a broader based pickup in activity. We like the look of this, the country level nickel smelting activity, for example, which has made a big move back. Typically, if it's below 40, that's a sign of real weakness, 50 being the average over the last 2 years. And we've seen that climb back from under 40 at the beginning of the month to, as I say, get above the 2-year average at the last data point you can see there just a couple of days ago. And similar to those large copper smelters, Shandong Xinghai is by far and away the largest nickel pig iron plant at about 190 KT a year. And again, we've seen that similar uptick in the raw index score, that line above the yellow bar, just at the beginning of the month. So this is short call, just an observation. We'll be monitoring this very closely as we move forward. But in terms of looking for, as I say, corroborating evidence that the economy looks like it could be on its way back, well, perversely not because of COVID reopenings, but this policy to run the COVID lockdowns in tandem with better economic activity, so we don't go back to those sort of really low levels that we saw back in April, May. So I'll leave it there. I think we've probably got time for a question or two if anyone wants to ask one. Otherwise, as I say, if you want to, please do look out for the regular updates that I'm sure we'll be posting in the morning thoughts from now on, as we monitor this and look for that trend to really gain ground and to confirm what we're seeing now as early sightings of what looks to be a pretty sharp recovery in activity in smelting.
That's brilliant. Thank you so much. Thank you so much, Piers. I know you also, whilst we've got the clients on chatting about the product and the fact that you're going to be expanding the insight across, I believe, Indonesia and some of the new operations there, if I'm correct.
Exactly.
So that's going to be interesting, particularly for people who do trade nickel. But the question I might have, which I know we've talked about in the past, but you know, when we talk about smelting activity, we're talking about essentially about pickup in production. Do you have some of this data? Are we able to overlay prices on it and how it reacts? Because obviously, you know, being a simpleton that I am, I hear people talk about increased production on copper and nickel. I see that as being bearish, although we're, you know, so what would your comment be there, please?
Yeah, it's an interesting one. I think that what we do is we see in different regimes, it's different. It means different things over different time frames. So this, I would say, is confirmation of better economic conditions and better demand pull from the downstream. But you're right. When we do so, we could equally say, actually, in some occasions, the production is outstripping demand, and therefore we would expect to see, you know, that to have a negative price response. But to be honest, it's usually the former. I would say it's usually that demand pull from downstream. Now, as I believe that we're going to see more of that, given the dynamic I mentioned at the beginning, where closer relationships through the supply chain between producers and their customers will mean that we might have to get used to this lack of visible stock that we're seeing at the moment, and therefore having to find other indicators for the health of demand versus supply, and in terms of the market balance and what that means for price.
That's fantastic. Thank you very much. And as said, we are, when Piers provides us with these snippets of very interesting insights, we are including them in our LME morning thoughts for those who do like to read those. Many thanks for all attending. We'll try and I'll speak to Piers afterwards, see if we can get copies of the slides that he's presented to you today. And if anybody would like a copy of those, please don't hesitate to reach out to either myself or anybody on the sales team that you'd like, and I will make sure that Piers is cognizant of who has. Thank you all.